Hey everyone, today we're going to talk about market structure and the different variables that create it. We're going to talk about pivot points and the important role they play in timing our entry, and we're going to focus on making sense of all the different zigs and zags, ups and downs you see on your chart and assigning meaning to them. This will allow you to better interpret price action, which will increase your confidence as a trader and improve your overall performance. I'm going to teach you the basics of market structure and sprinkle in some more advanced concepts along the way to further your understanding. Today, we're going to demonstrate how even a basic understanding of market structure can provide an edge to you as a trader. And we will also talk about tools and resources that traders can use to improve their ability to visualize market structure and dive deeper into some of the topics discussed today, should they choose. Before we begin, I'd like to emphasize that this video is first of many in a series designed to cover only the most important concepts and topics I believe are needed to build a firm foundation in technical analysis that you can then later build a trading system around. So let's talk about market structure. Most traders have heard of the term before, and we hear all the time now phrases like break of structure or structural shift. And almost every trading system is going to be based around market structure itself. They just use different terms to describe it. But in order to really grasp market structure for what it is, we need to understand how stocks tend to move. The price of a stock moves in thrust, either up or down. No stock will ever move in a straight line. If a stock is advancing in what's referred to as an uptrend, price will increase for a certain period of time, then consolidate for a while before continuing its ascension. These new highs and new lows are making what we call a market structure. An uptrend is defined as a structure built of higher highs and higher lows, whereas a downtrend or a pullback is a structure built of lower highs and lower lows. And as a trader, we want to find the moment where the odds are shifting in our favor. To be able to confirm this change of character, we'll need to see a structural shift. If looking to trade a pullback, we would need to see the structure shift from a short-term downtrend to an uptrend. To confirm this structure shift, we want to see a higher low that is followed by a higher high. Now, you might look at this example and say, well, by the time that higher high is confirmed, I've already missed all that initial move. And you're right, but that's where our little pivot friend comes into play. The ability to identify potential pivot points is vitally important for finding higher quality entry points, and I'll explain pivot points in a moment, but first it's important to know that regardless of the trading style you practice or time frame you primarily operate from, pivot points should be incorporated into your method. A pivot is a particular level where we are able to make an educated guess that if we break above, there will be a shift of momentum and price will likely make a higher high. If price were to break out above our most recent swing high, which was the last lower high in our pullback structure, then our next swing will create a new higher high. So in this case, the recent swing high would be our pivot. That's because the stock is potentially transitioning from a downtrend to an uptrend. And the break of that lower high is the first real sign of that. So why are pivots so important for timing an entry? There are two main reasons. The first, it increases your trade probability by waiting for a price structure shift. And two, you get in the trade earlier by entering lower in the base, thereby increasing your profit potential. One could even enter at the moment the downtrend line is broken, offering them an even earlier entry point. However, the probability of that trade working is less favorable since we did not confirm a price structure shift yet. Now, it's absolutely essential that you train your eyes to see market swings and price structure. It can be a bit challenging at first to see those highs and lows. However, with effort over time, that becomes much easier. For those of you who are interested in better developing their ability to identify pivot points, there's an indicator called Zig-Zag available on almost every good charting software that will highlight on your chart market structure. You could use it for a couple of weeks if you need help spotting market structure more quickly. However, you don't want to become too dependent on it and you want to challenge yourself looking at the charts without it from time to time. and you can find the link to that indicator along with the settings I use in the description. Now I'd like to share important characteristics you want to make sure a stock has if looking to trade a pullback in the first place. The first would be a prior uptrend. We want the stock to have an uptrend on the left side of the chart that's at least 10 to 20% in depth. The bigger that percentage gain, the better. Now, percentage gains are great and will help in gauging the strength of an uptrend. However, as we progress through the series, you'll see that there's several other price characteristics we could layer on top to help us really assess the underlying strength of that trend. And that's important because the more powerful the trend, the more likely the trend is to be sustained. You'd be surprised when you have two charts sitting side by side that have both risen the same amount in percentage gains, how one could be so much more bullish just due to the underlying structure of that uptrend versus the chart sitting right next to it. Alongside a prior uptrend, we want to see a pullback structure taking shape. This would be defined by a structure that is making lower highs and lower lows. It's through this that we'll be able to identify our actionable pivot point to get involved with the stock. If you have the characteristics listed here, then you're ready to simply attach a straight line to the most recent swing high within the pullback. We now have a stock that is pulling back. So the question is, how do we use pivots to enter a trade? Once you find a good setup, you want to mark your pivot with a line and then place an alert just below it. Now, when the market opens and all these different alerts are going off, what should you do? There are a few different tactics that you could use when looking to enter a trade. The first is you enter directly on the pivot breakout, which is going to give you a better entry price. However, the chances of getting caught in a failed breakout increase because of that. You could also enter using the first 10-minute pivot breakout high. This will likely give you a higher entry price. However, you increase the probability of that trade working. I want you to remember these two different entry tactics because they're going to give you the option to take a more aggressive or conservative stance when looking to enter a trade going forward. If I choose to enter directly at the pivot breakout, I simply enter when price crosses above my pivot level. With this tactic, you get an entry that is very close to the pivot. However, the risk is higher that the stock fails to break out. There are a couple of different options you can choose from when it comes to selecting your stop loss. You can either opt for a tighter stop using the low of day, which would allow you to take a larger position, or you could opt for a wider stop using the most recent higher low. Although this will give the trade more room to work, the downside is you now have to position smaller to make up for that wider stop. To increase your win rate, you could opt to wait for a little confirmation at the pivot. In that case, once you get a break above the pivot level, you drop down to the 10-minute time frame and mark the high of that 10-minute candlestick. Then use the high of that candlestick for your entry point. In this case, you will most often want to use a tighter stop loss, that being the low of day, which in this case was 1834. Now let's talk about managing a trade early on using pivots. It's good to know what to expect from price once a stock has broken out and the different ways that you can handle each scenario. Obviously, not every trade is going to work. There will be many instances that a stock attempts to break out only to roll over shortly after that. In this case, the price will come right back to your entry level and potentially break below it. It's just part of the game, and it's especially common during harsh market environments. So we always want to know how to act depending on each scenario. So let's walk through those. Whenever you enter a trade, you want to look for these early cues. The first scenario would see price break out powerfully, then pull back slowly to the pivot level. This is exactly what you want to see. It's healthy price action, and it's likely there will be a continuation higher following that pullback. The second scenario would be price breaks out and then sells off aggressively. However, it holds the low of day. In this case, although the initial price action was not ideal, I like to give the stock some time below the entry level to see if it was only a shakeout. I'll keep the position throughout the remainder of the trading day, providing that stop loss wasn't hit. But if price does not come back above the pivot by the end of the day, I'll close the position. The third and final scenario is price breaks out, but sellers step in immediately, pushing price down below our stop loss. And in this case, I'll sell that position right away, no questions asked. So I hope with the understanding of market structure that you now have in hand, plus some actionable ways to incorporate it directly into your trading, that you can view charts with a bit more clarity. Some of the rules I share with you may not fit your style or personality, but it's important you do have a system in place with specific rules that fit your personality. And you'll figure those out over time through experimentation. I'm going to create a thread on the forum for anyone that has questions regarding this video or anything that was discussed within. Please don't hesitate to ask whatever question you may have. I'm sure many other people do as well, so you would only be benefiting the community as a whole. Appreciate you taking the time to watch this video and look forward to creating the next one for you. If you have any feedback, please do feel free to reach out. Thanks.